So Meta overall on the daily is looking very good for a potential put position as well. Same type of setup as the S&P 500, but the thing you have to understand is that we have to respect this massive uptrend that we've had since the beginning of this year. But something to notice this time that has not happened before we have tested this trend line support, but this time we have actually broken below and held below trend line support, and specifically under this 5 SMA. So looking at that, it's not full-on confirmation quite yet, but it's pretty damn close. I'd like to see this candle tomorrow hold under 214, but it's looking pretty good. The issue that I have with something like this is that you have to hold through earnings. So if you wanted to get a put, you'd have to hold through earnings, and it's just way too risky. You can't use proper risk management during earnings because of the massive gap ups overnight. You can say till you're blue in the face that I'm going to set a stop loss at 220, but if you have a put and Meta pops 10% overnight, you can't do shit about it anyway. So having this good old RVR doesn't mean anything if you can't stop that anyway. So that's why this is how I would normally be setting this up, because the risk versus reward is beautiful. But because of practicality reasons and because of earnings tomorrow, the only way that I would be playing anything for earnings and the only way I'd be playing this with Meta is with spreads. Because at least with a spread, you're going to predetermine what you want to lose before you take the position. So it's not like if you got $20,000 worth of shares on Meta, if Meta drops 60% overnight for some reason during earnings, you would not actually have expected that to happen and you would have never accepted the risk. Whereas with spreads, you fully accept the risk because you're like, well, there's a huge chance that this is going to happen. So I have to accept that this is what I'm going to be putting up. So I think the best way to be playing this would be spreads. I'd be looking at not anything too crazy. I wouldn't be looking at like super far out of the money spreads, because it's not like a normal spread where we're doing this super far out of the money so that we can just instantly get this premium. We're more so just doing this to limit our risk. So I'd be looking at like a 214 or a 216 call credit spread. But the thing here is, like, technically it looks like shit, but I think Meta's earnings might be pretty good. I'm a long-term investor in Meta, so I'm not touching it, but Meta is really not looking too good from a technical level. However, who freaking knows how earnings is going to be?